Wait, so today we're doing a deep dive into Bath and Body Works.
BBWI.
BBWI, right?
Yeah.
You know, that store that
Everyone loves.
makes everything smell amazing.
Yeah, absolutely.
Like so many different things, I feel like.
So many.
Shower gels and lotions and candles and those wall plug-in
The
things.
wallflowers.
Yeah.
Huge part of their business.
Wallflowers. Yeah, it's amazing.
Yeah.
And, you know, they've got like almost 1,900 stores
Yeah.
of their own, and then they also sell online.
Big online presence.
Yeah. And you can do that, like buy online, pick up in store.
BOPAS, it's called.
UPS, yeah. And they even have like some international stuff, right?
They do, through franchising, mostly.
Okay.
Yeah.
Got it.
Yeah.
So you sent me their like big research report and their latest earnings call.
Right.
So I feel like we're pretty well equipped to like dig into their business,
Absolutely.
see how they stack up against the competition, all that good stuff.
That's right.
Awesome.
Yeah.
So I guess first things first, like what are they actually selling? Like what are their main product lines?
So what's interesting is they have a pretty even split between their two core revenue streams.
Okay.
So you mentioned it, body care and fragrance. So that's like your lotions, your shower gels, your body mists,
Right.
all that kind of stuff.
Okay.
That accounts for about 40% of their sales.
Got it.
And then on the other side, home fragrance,
Okay.
candles, air fresheners, wallflowers.
Yeah.
That also accounts for about 40% of their total sales.
That's like a really good balance, right?
It
Like they're not
It is.
too reliant on one or the other.
Exactly. Yeah.
Like if personal care like takes a dip, they still have home fragrance or vice versa.
Exactly. Yeah.
That's cool.
It makes them a bit more resilient, for sure.
Awesome.
Hmm.
So then beyond that, it seems like they're also like kind of branching out, right? Like
Yeah.
trying some new things.
Absolutely. They're looking at what they call adjacencies. So we're seeing them move into hair care,
Okay.
lip care, which I think is a really interesting play,
Especially for like a younger demographic, I feel like, right?
Yeah, exactly. Exactly.
Yeah.
And even laundry.
Laundry. Wow.
Yeah.
That's like a whole different.
It's a big market.
Yeah, it is.
It is.
But it makes sense, right? Like
Yeah.
if you like their scents,
That's what I think.
you can want them in your laundry too.
Yeah, exactly. Like, why not expand that brand experience?
Right.
Capture more of that consumer wallet share.
Okay, cool.
Yeah.
And then in terms of like how they actually get their products to people,
Right.
obviously the stores are huge.
Still a huge part of the business.
Yeah, almost 1,900 locations, like you said.
Yeah, that's where they can really emphasize that sensory experience, with fragrance. You got to smell it before you buy it.
You really do.
But their digital presence is also, like, not insignificant at all.
Yeah.
It's 21% of sales, I think we saw.
Yeah. Yeah. And like, I feel like BOPI has been a big driver of that, right?
That's huge.
It grew 40% year over year, I think it said.
Yeah, that's massive.
Yeah.
That speaks to how consumers are blending the online and offline experience.
Totally.
Yeah.
And then international, I feel like they're like dipping their toes in.
Yeah, it's still a relatively small part of the business.
Yeah.
5% of sales.
Okay.
But they definitely see that as a growth opportunity,
Okay.
leveraging those franchise partnerships.
Got it.
Yeah.
And we also got to talk about the collaborations, right?
Sorry.
Like Stranger Things, Emily in Paris.
Huge buzz around that Disney princess line, too.
I know, everyone's talking about it.
Yeah, that's a really smart way to generate excitement.
Totally.
Tap into those existing fan bases.
Yeah, and like get people talking on social media.
Exactly.
Okay, so they've got all these products, these partnerships.
Yeah.
But like, who are they actually competing with? Like, what's the landscape look like?
Right. So that brings us to their competitive landscape.
Yeah.
And Bath and Body Works definitely has some pretty strong advantages.
Okay, like what?
First of all, their brand awareness is just like really high.
Yeah, I feel like everyone knows Bath and Body Works.
Especially among their target demographic. Yeah.
Right.
They're also the market share leader in a lot of their key categories.
Oh, interesting. Like which ones?
Home fragrance, for sure.
Right.
Body care,
Mm-hmm.
hand soaps, and sanitizers.
Wow, okay.
So that kind of brand loyalty, that really translates into pricing power.
Right.
People are willing to pay a premium for a brand they trust.
And you see that like during their sales, right? Like,
Oh, yeah.
it's crazy.
The crowds are huge.
People love it,
Yeah, they've definitely cultivated a strong connection with their customers.
for sure.
And it's not just like sitting on their laurels either.
Right.
They're constantly putting out new fragrances.
Yeah, it feels like, what, every few weeks there's a new collection?
Yeah, they have these seasonal collections.
Yeah.
They're always keeping things fresh.
Right, and those new product lines, like,
Yeah, the hair care, laundry,
Hair
all that. That's another way to grow.
Totally.
They're also very operationally efficient.
Okay, what does that mean?
So they have a pretty fast cash conversion cycle.
Okay.
So basically, they're turning their inventory into cash pretty quickly,
Got it.
which is a sign of like healthy operations.
Okay. So they're not sitting on a bunch of stuff that's not selling.
Exactly.
Got it. That's good.
And their loyalty program is huge.
Yeah, it seems like everyone I know is in that.
Over 80% of their US sales come from loyalty members.
Wow. That's a lot.
It is. It is.
Okay, so it sounds like they have a lot going for them.
They do. They've built a pretty defensible position in their market.
Well, like every business has challenges, right?
Of course. Of course.
So what are some of the things that they're facing?
So one of the big ones is that they're very exposed to consumer discretionary trends.
Okay, what does that mean?
Basically, when the economy takes a downturn,
Yeah. People start cutting back on things they don't absolutely need.
right?
And that includes things like, fancy candles and lotions.
Makes sense.
So that's a risk for them.
Okay. Yeah, and like their move into skincare, that seems like a tough market to crack.
It is. It's very fragmented.
Yeah.
And you've got some, like, really big players there.
Right.
With tons of resources
Right,
and
yeah.
established reputations.
Yeah, it's not like fragrance where they're like the leader,
Exactly. It's a different game.
Totally.
Yeah.
And then I was looking at their debt to EBITDA ratio, and it's like around 3 times,
Yeah.
which basically means their debt is 3 times their earnings.
Before interest, taxes, depreciation, and amortization.
Right. Yeah. All that stuff.
Yeah.
So it's not like crazy high,
Not alarming, no.
but it's something to keep an eye on.
It could potentially limit their flexibility for investments.
Okay. Yeah, that makes sense.
And international expansion always comes with risks, right?
Especially now, it seems like. Absolutely. Yeah. The global landscape is complex.
It is.
And then even within fragrance, they're not alone.
Right.
You've got Yankee Candle and those big consumer packaged goods companies like Procter & Gamble.
Right. So they're not just competing with, like, little niche brands.
Exactly. They're up against some heavy hitters.
Got it.
Yeah.
So you mentioned some of those competitors.
Mm.
Like, how do they actually compare to Bath & Body Works? Like, what are their strengths and weaknesses?
So if we look at Unilever, for example,
Yeah.
they have this huge global reach
Right.
and a really diverse portfolio of brands,
Yeah.
but they tend to focus more on the mass market,
Okay.
more price-sensitive consumers.
Yeah, yeah.
Think of brands like Dove,
Yes.
whereas Bath & Body Works is a bit more premium.
Yeah.
Procter & Gamble, they're a powerhouse in skincare
Right.
and household goods.
Yeah, like cleaning supplies and stuff.
Exactly.
Yeah.
But they don't really have a strong presence in home fragrance.
Okay, interesting.
Yankee Candle, they're the leader in specialty candles.
Yeah.
But that's pretty much all they do.
Right, they're very focused.
Very focused, yeah. Williams-Sonoma, they're more in the luxury home goods space.
Okay.
So they don't have that same mass appeal as Bath & Body Works.
Right, and their loyalty program isn't as strong either.
Exactly.
Yeah.
And then Kenvue, they're focused on more science-driven personal care.
Okay.
So think Neutrogena.
Right.
There's not a ton of overlap with Bath & Body Works niche.
Got it. So it seems like Bath & Body Works has like a really solid position in their market.
They do.
Thanks to that brand loyalty, operational efficiency, all that stuff.
Mm-hmm.
But they definitely need to be mindful of like economic shifts
Yeah,
and the challenges of expanding their reach and product lines.
absolutely.
So with all that in mind, like how are they planning to keep growing? What's their strategy?
So their growth strategy really has a few key components.
Okay.
First of all, they're looking to expand those adjacent categories we talked about.
Right, like hair care, laundry.
Exactly.
Yeah.
Those currently only make up about 10% of their sales,
Okay.
but they're seeing some really promising results.
Oh, like what?
So, for example, their men's purchase with purchase program,
Okay.
that sold out in like 4 days.
Wow. Okay.
They also expanded their everyday luxuries line to include men's products
Okay.
and their lipicare category.
Yeah.
That saw like almost 50% year-over-year growth.
Wow, that's huge.
Yeah, it is. It is.
Okay, so it seems like that's working out well.
It seems to be. Yeah.
And then laundry, that's still pretty early, right?
Right. The very early stages,
But they see a lot of potential there.
long-term potential. Yeah.
Okay, that makes sense.
Yeah.
Like once you have that brand association, people might be more likely to try your shampoo or your laundry detergent.
Exactly.
And of course, they're constantly innovating with their core products too, right?
Absolutely. New scents, seasonal collections.
Yeah, it feels like there's always something new.
Always something new.
Yeah.
And those collaborations, they really generate a lot of buzz. They're
Right.
really good at capturing attention.
Yeah, for sure.
So yeah, innovation in their core offerings is key.
Okay, and what about internationally? I feel like they mentioned that as a growth area.
Yeah, they're projecting 8% annual growth after 2025 for international,
Okay.
which is pretty significant when you consider that it's only 5% of their sales right now.
Right, so there's a lot of room to grow there.
A lot of runway.
And that's mostly through franchises, right?
Primarily, yeah. And new store openings.
Okay, cool.
They mentioned some strong performance in regions that weren't affected by geopolitical issues.
Okay, so they are seeing some success there.
Yeah, it's a positive sign.
Got it.
And of course, they're also really focused on their digital presence.
Right, that's got to be huge these
It's
days.
essential.
Yeah.
E-commerce, BOPIS, all of that.
Right, and investing in technology to improve the customer experience.
Yeah.
And their loyalty program, that's like a core part of their strategy, right?
It really is. Yeah.
They're even planning to make it even better in 2025.
Yeah, some enhancements are coming.
Okay, cool.
And we can't forget their efforts on the cost side either.
Right. What was that called? Fuel for growth.
Fuel for growth, yeah.
Yeah.
They're targeting a lot of cost savings.
Okay, so they're being smart about their spending.
They're trying to be, yeah.
Awesome.
So it's interesting to look at how their competitors are approaching growth too.
Okay, yeah. How are they doing it?
So for example, Unilever is really focused on premiumizing their brands and
Yeah.
expanding in emerging markets.
Right, those are kind of two different things.
Yeah, but they see potential in both.
Got it.
P&G, they're all about product innovation and geographic diversification.
Okay, so kind of spreading out their risk.
Got it. Kenvue is really doubling down on those science-backed personal care solutions.
Okay.
Yankee Candle, they're sticking to their knitting, focusing on home fragrance.
Right, staying in their lane.
Exactly.
And Williams-Sonoma, they're all about the luxury consumer.
Yeah, high-end premium experiences.
Okay, so it seems like everyone's got their own approach.
Absolutely. Different strategies for different companies.
So when you look at Bath & Body Works' strategy, it seems like it has a lot of potential.
It does.
They're pursuing multiple avenues for growth.
Mm-hmm.
They have a strong brand, and historically, they've had a good return on their investments.
That's right.
But there are risks.
Right. Of course, there are always risks.
Like consumer spending can be unpredictable,
Yeah, that's a big one.
and breaking into new categories means going up against some really big companies.
Absolutely.
And international expansion, that's always tricky.
Always.
And then they've got that debt to manage.
Right. That's another factor to consider.
Okay, so let's talk about those risks a bit more.
Yeah, let's dig into that.
Like, what are the biggest execution risks they're facing?
So I think the most significant one is their dependence on discretionary spending.
Right, because if the economy weakens...
People might cut back on those non-essential purchases,
Okay.
and that could really hurt their sales.
Okay, yeah, that's a big one.
And then, scaling those adjacent categories.
Right, like hair care and laundry.
Yeah. That's not going to be easy.
Because they're going up against companies that are already established in those markets.
Exactly. They have market share. They have resources.
Right.
It's going to be a battle.
Okay, yeah, that's a challenge.
International expansion, as we've said, always comes with its own set of risks.
Yeah, like what?
Geopolitical issues, regulatory hurdles, local competition.
Right, it's a whole different ballgame.
It is. It is.
And then there's the potential for supply chain disruptions.
Yeah, that's always a possibility these days.
Right, and like pricing pressures, all that stuff.
It could impact their profitability.
Okay, yeah, there's a lot to consider there.
There is.
And their debt level, that does add a layer of financial risk.
It does.
Okay, so how do these risks compare to what their competitors are dealing with?
So it's interesting to look at that, right?
Yeah.
Because everyone's got their own unique challenges.
Right.
So Unilever, for example,
Yeah.
they're so global that they're exposed to a lot of geopolitical instability.
Yeah, and currency fluctuations, all that.
Exactly. Yeah, but their debt levels are generally lower than Bath and Body Works.
Okay, interesting.
P&G, they're also global,
Right.
but they face this challenge of differentiating their products
Yeah.
in these really commoditized markets.
Right, where it's all about price.
Yeah, exactly. And they're also dealing with rising raw material costs.
Okay, so they've got their own set of headaches.
They do. They do.
Got it.
Kenvue, they're more focused on healthcare related products.
Right.
So their demand might be a bit more stable.
Okay.
But the competition in skincare is fierce.
Yeah, we talked about that.
Yeah, it's tough.
Yep.
Yankee Candle, they're really concentrated in home fragrance.
Right.
So if that market takes a hit, they're going to feel it.
Okay, yeah, that makes sense.
And Williams-Sonoma, they cater to that higher income consumer.
Right.
So they're really sensitive to any economic downturn that affects luxury spending.
Okay, so it's like different risks for different companies.
Exactly. Different
And
profile.
it sounds like Bath & Body Works' risk is like moderate to high,
I'd say so, yeah.
mostly because of that reliance on discretionary spending
Mm-hmm.
and the complexity of their growth strategy.
And that leverage.
Right, the debt.
Yeah.
Okay, so let's shift gears a bit and talk about their recent performance.
Right.
Like their Q4 2024 earnings call. That just happened.
Yeah, just last month.
Yeah, what were the key takeaways from that?
So overall, it seems like Q4 was a pretty good quarter for them.
Okay.
They reported net sales of $2.8 billion,
Wow, that's a lot.
which actually beat their guidance.
Oh, nice.
And importantly, their sales performance was improving sequentially throughout the year.
Okay.
Once you adjust for like calendar shifts and stuff.
Right.
Their gross profit margin was also better than expected, 46.7%, which is up year over year.
Nice.
And they attributed that to like cost savings and distribution efficiencies.
Okay, so they're getting better at managing their costs.
It seems like it, yeah.
Good.
And their earnings per share also beat guidance.
Okay, so they're making money.
They are.
That's good news.
Yeah, and they saw positive traffic and conversion trends in both stores and online.
Okay, so people are shopping.
People are shopping.
That's good.
And their loyalty program membership keeps growing.
Yeah, we talked about how important that is.
It's huge for them.
Okay, so that's all really positive.
It is. It is.
How did their different product categories do during the quarter?
So body care grew low single digits,
Okay.
driven by the strength of their everyday luxuries line.
Okay, makes sense.
Home fragrance was down slightly,
Oh, interesting.
but they said that was mostly because of the timing of their promotions.
Okay, so not necessarily a cause for concern.
Not necessarily, no.
That's right.
Soaps and sanitizers, that was up mid-single digits. Potentially driven by, like, the ongoing focus on health and hygiene.
Right.
They also highlighted the success of some of their collaborations, like Emily in Paris and Sweethearts,
Mm-hmm.
and they're really excited about the upcoming Disney Princess launch.
Yeah, that's going to be big.
They think so, yeah.
And in terms of their store portfolio, they're continuing to move towards more off-mall locations, right?
Yes, they said that 57% of their stores are now off-mall,
Okay.
and their target is 75%.
Okay, so they're making progress there.
They are.
Got it.
Yeah.
And what about their outlook for 2025? What are they expecting?
So for the full year 2025, they're projecting net sales growth of 1% to 3%.
Okay.
And earnings per share between $3.25 and $3.60.
Okay.
They're expecting their North American store square footage to grow a little bit.
Okay.
And they think their international business will return to growth.
Good.
They're forecasting a gross profit margin of around 44%.
Okay.
And SG&A expenses to be about 27% of sales.
Okay. And that includes their marketing spend, right?
It does, yeah.
Okay.
They're also planning about $300 million in share repurchases,
Okay.
and they expect to maintain their dividend.
Okay, so it seems like they're returning value to shareholders.
Yeah, they are.
Yeah.
And for Q1 2025 specifically,
Okay.
they're also forecasting net sales growth of 1% to 3%.
Okay, so consistent with the full year.
Yeah, consistent.
Got it.
They did mention that their outlook already factors in the impact of those tariffs on goods from China.
Okay, so that's already baked in.
It is, yeah.
Got it.
Yeah.
So it seems like they're in a pretty good financial position overall.
Yeah, they generated a lot of free cash flow in 2024.
Okay.
And they used it to pay down debt, repurchase shares, and pay dividends.
Okay, so they're being smart about their capital allocation.
It seems like it, yeah.
And they're planning to continue that in 2025.
That's the plan.
Okay, good.
But they did acknowledge that consumers are becoming more value conscious.
Right, like looking for deals and stuff.
Exactly.
Yeah, that makes sense.
And the competition is still intense.
Yeah, no surprise there.
So they're not like resting on their laurels or anything.
Right, they're still got to fight for every sale.
Absolutely.
Okay, so as we wrap up here, what are like the key things that investors should be watching for with Bath & Body Works?
So I think the biggest one is just overall consumer spending trends.
Right. because that's going to have a huge impact on them.
Yeah, if people start tightening their belts, that's not good for Bath & Body Works.
Okay, yeah, that's a big one.
The performance and scalability of those adjacent categories.
Right, like can they actually make those work?
Exactly. Can they gain traction in hair care, laundry, all that?
Yeah, because that's a big part of their growth strategy.
It is.
And competitive pressures, both in their core markets and those new areas.
Yeah, they're going to be facing competition from all sides.
Right, so they got to stay sharp.
They do.
And how their international expansion is going.
Yeah, is it actually working?
Are they able to overcome those challenges?
Exactly.
Because that's another big growth area for them.
It is.
And then, they're a seasonal business.
Very much so.
So like how they do during key sales periods.
That's going to be important.
Yeah, like holidays, back to school, all that.
Exactly.
And their ability to keep innovating.
Yeah, that's crucial.
Because if they get stale, people are going to lose interest.
Absolutely.
And their margins, like, can they maintain those in the face of rising costs?
That's a big question mark.
Yeah, because everything seems to be getting more expensive these days.
It is. It is.
And their digital strategy, like, is that actually driving sales?
That's something to watch closely.
Yeah, because that's a big investment for them.
It is.
And then any changes in the geopolitical or regulatory landscape.
Yeah, like beyond those China tariffs.
Right, because who knows what's going to happen.
It's unpredictable.
And how consumers respond to their pricing and promotions.
Yeah. Are they still willing to pay a premium?
Right. Or were they becoming more price sensitive?
Yeah.
And how their loyalty program is performing.
Yeah. Is it still driving engagement?
Because that's so important for them.
It is. It is.
And then can they actually execute on those cost optimization initiatives?
Yeah, that Fuel for Growth program.
Yeah.
Can they actually deliver those savings?
Right, because that's going to impact their profitability.
It will.
And then, of course, the overall macroeconomic environment.
Yeah, that's always a wild card.
Like what's happening with inflation, interest rates, all that stuff.
Exactly.
Yeah, there's a lot to keep an eye on.
There is. There is.
Okay, so to sum up our deep dive into Bath & Body Works,
Yeah.
we've seen a company with a really strong brand,
Mm-hmm.
a loyal customer base,
Absolutely.
and a history of innovation.
In their core category.
Right, fragrance, body care, all that.
Yeah.
They're trying to grow through new product lines and international expansion.
And focusing on efficiency.
Right, being smart about their operations.
Exactly.
But they are in a sector that's sensitive to the economy.
Yeah, that's a risk.
And they're facing execution risks as they expand and compete with bigger players.
It's not going to be easy.
So I think it's going to be really interesting to see how they navigate all of that.
I think so too.
They have a lot of strengths, but they also have some challenges.
It's a balance.
Yeah.
And what I keep coming back to is just how important their brand loyalty and innovation are going to be.
Right, because they're facing more competition.
Yeah, and consumers are changing.
Exactly.
So can they keep those customers coming back for more?
Right, and can they keep coming up with new products that people love?
That's the million-dollar question.
Yeah, it really is.
It's going to be fascinating to watch.
Absolutely.
Yeah,
Well, I think that's a good place to wrap up.
I agree.
Thanks for joining me for this deep dive into Bath & Body Works.
My pleasure.
It was a really interesting conversation.
It was.
I learned a lot,
Me too.
and I think our listeners will too.
I hope so.
All right, that's all for today.
Okay.
Thanks again,
Thanks.
and we'll see you next time on
This content is produced by Compasscope.com. For more than 1,100 public listed companies, find detailed research reports, visual mind maps, earnings call analysis, and audio discussions on Compasscope.com.